Welcome to Making Real Estate Fun. I am one of your co-hosts, Taji Clark from Coldwell Banker, sitting here with our other host, Keith Hoffman of Draper and Kramer Mortgage, and sitting with Mike Breier, who is a CPA out here in the Chicagoland market. And thank you for joining us. Today we're going to talk, and we're minus one of our hosts, by the way, Kevin O'Flaherty of O'Flaherty Law, called in sick today. No, he had the flu, so he couldn't be here, and so we wish him well and all of that. So we'll wing this without him. So, Mike, welcome. Thank you for being with us today.
Thank you for having me.
Awesome. So you are a CPA. Tell us a little bit about yourself and how you got started and all that good stuff.
Well, for years, I've been a CPA for a little over 35 years now, and most of that has been working with real estate developers, realtors, all things real estate, construction contractors, and mortgage brokers as well. And real estate, construction, buying and selling homes has always been something that's been in my blood since the very start. I started my career wanting to be an architect, and my father just simply couldn't afford 8 years of school, so I ended up going in the next best track from even back then they said that going into anything with numbers and in accounting, you were always going to be employed. That's turned out to be true for 36 years, and so I'm very glad to be here and very glad to be working in this environment, helping folks with their decisions in buying, selling, constructing homes, and also working with the people that make all those things happen.
Awesome.
Well, I want to tell you we're at Mojo's East Coast Eats here in Downers Grove, and they are known for their Philly steak sandwiches. And I will tell you, this beautiful sandwich is waiting for me. I'm going to be eating this while we're talking, so I'm just telling you. If you've ever been to Philly, you know that the cheesesteaks come with cheese whiz, not cheese. And so this is the original, and I think Mike is going to enjoy this too. So
yeah, and I can tell you the French fries are to die for.
There you go.
I'm going to try to catch Keith in mid-chew. So, if I'm talking to Mike and all of a sudden I just switch real fast to ask Keith, it's because he's in mid-chew and I'm trying to catch him up. So anyhow, with regards to, helping people with their taxes, tell us, some things. Obviously when people buy homes, when people sell homes, that obviously changes their tax, situation depending on, price of the home, all of that value, equity, all of those things. What are some things that, a home buyer should know when they are preparing their taxes after, purchasing their first home?
Well, first of all, I'd like to say that, buying a home, particularly for somebody that's buying a home for the first time, this is, a very, very big life event for them. And, of course, they want to make sure that all the ducks are in a row. And somewhere along the line, they've heard that if I buy a home, I'm going to reduce my taxes. And by and large, that is pretty true. Uncle Sam is going to help you with a number of deductions that you will be able to take over and above a standard deduction on everybody gets a standard deduction on a return, and you're allowed to deduct any deductions that you amass, charitable contributions, real estate taxes, mortgage interest for most people. These are all the typical deductions that people have on their tax returns. When those get over the standard deduction, you get to take the overage amount as additional deductions right off of your tax. That doesn't mean dollar for dollar now. What that means is that you get to reduce your taxable income. And so if you're in a 20% tax bracket, you're going to save 20 cents on every dollar for these types of deductions. The ones that are related to homes, owning a home, of course, the biggest ones are mortgage interest and real estate taxes.
Sure. Now, when you go to a closing and you're paying for things that eventually will be tax deductible, the one question I've always had was, if somebody's paying points when they purchase a home, is that tax deductible? And the second part of the question would be, if it is tax deductible, what if the seller paid the closing points for the borrower?
Okay, that's a question that I get a lot. And you would think in that case that just using the terminology that the seller paid those, the way it's treated in the eyes of the tax law is though the purchase price of the home was just simply reduced and that the buyer turned around and paid whoever is the person that is liable on that mortgage, and the mortgage has their home that they're going to occupy as security, regardless of who they say pays those points, they are only deductible by the owner of the home.
Okay.
And not the seller. The seller really has no interest in a tax deduction and paying the points of their buyer.
That's a great answer, because I'm glad our attorney is not here, so they can't argue with this point, you know?
That's right. I don't argue him anyway.
I'm sure you will.
He probably dresses better than I do.
Well,
But,
you're fine. You look great.
I want to say I'm the best dressed guy here.
You absolutely are.
Okay. But usually the attorneys will try to outdress me. Bankers usually outdress the attorneys.
And today's a day off, so we're done.
So they've purchased their home, or maybe they've just sold a home. What are some standard paperwork, or what is the standard information that they would need to get together before coming to see you to help them, with their taxes at the end of the year?
Well, generally I'm going to tell them that they need to provide me with the closing statement on the property, whether they be a buyer or a seller.
Sure.
And now, that's a nice thing to say to the typical person who comes in and has their taxes done, but you'd be surprised that they're going to say, with this big packet that they got, this big pile of papers, they're going to say, well, what does that look like? And sometimes I'll have to use a code word because, I said, well, look at the tops of the paper, and if you see one that says HUD 1, HUD 1, that's the document I want to look at. Now, there's a lot of alternative closing statements that an attorney might provide them with, buyer, seller side, et cetera, but the HUD one's got everything that I need. It's got the seller's transactions, the buyer's transactions, and everything that your CPA needs to have to make sure that the numbers are incorporated into your tax return.
And that's actually even changed now. I think it's called a settlement statement now. They've kind of started to do away with HUD and HUD 1, and so now they've just started calling them settlement statements.
Just settlement statements?
Yeah.
We've got, they've got the loan estimate that's sent out, the closing disclosure, they're gonna call it something else by the time we get done with this video, I can tell you
That's
that.
right. That's right. And when in doubt, send me the whole package, and then I can sift through it and find the numbers and the papers that I need.
So when somebody wants to come in and make an appointment with you, what are the best things that they can get together for you? Because obviously they get pay stubs and W-2s and whatever. What things do you need?
Well, aside from those things that you just mentioned, typically what I'll do for a new client is I will send them what I call a tax organizer.
Okay.
And what it is basically it's a series of questions and checklists of things that they might have that tells them what to put together in order for me to do their tax returns. Now, generally speaking, if I'm dealing with millennials in this day and age, we're not having a tax appointment.
No.
What I have is, I've got all the latest and most secure technology where people can either use their office scanner or a scanner at home. And if they were to go through this list, scan those documents into PDF format, I've got a secure web portal that they can go into my website, put in a username and their own designated password, and they can drag and drop, upload those right into my portal, and then we're ready to go. And I can Skype with them. We've got email, Skype, and telephone. And so particularly in these terrible weather months when we're talking about tax returns, typically young people are not looking to get in the car. A lot of them, first year people, they might, I like to meet them and I like to put a face
Sure.
with, a face with the name, and also be able to explain to them in a little bit more detail what the tax preparation process is like, particularly if they're a young person who's been struggling through their own tax preparation, and all the hours and twists and turns that entails. This might be their first, particularly when they're going to buy a home. In a lot of cases, if it's their first home, it's probably their first professional tax preparation experience.
So, especially the first-time buyers, and they go in and they do their tax return next year with you, are there any big pitfalls that people run into? Because what I've seen is some issues come up. They want a tax deduction for something that they really can't have.
Well, they're going to do all the reading and they're going to do all the research. That's what everybody does these days. They're going to go out on the web and they're going to say, you can deduct your real estate taxes, you can deduct your mortgage interest. These things are generally true, and except in the state of Illinois, in the first year in which you purchase a home, you are not going to be able to deduct real estate taxes, even if that money was taken to establish an escrow to pay them when they're due in the following year. Because in Illinois, real estate taxes are always paid in what we call paid in arrears. In 2017, you are going to be paying your 2016 tax bill.
Right.
And real estate taxes are deductible when they are paid. When they are paid to the taxing authority, not into an escrow.
Oh, so then, let's say somebody sells their house this year, and they're giving a credit to some buyer.
Right.
So next year, when they go to do their taxes, they can still take that off on their taxes.
They can take a deduction for, let's see, if you purchased a home in 2016, you can take a deduction on your 2017 return for the 2016 taxes that they actually paid.
Okay.
And because they got a credit at their closing for the real estate taxes for 2016, which 100% are going to come out of their escrow that was established,
Right.
or they're going to write a check for that entire bill, even though they weren't there for all of 2016. However, if they were there for 5 months of 2016, when you take the credit that they received from the seller of the home at closing, when you take that and subtract that against the total bill that they paid in 2017 for 2016, the net comes out to the time they occupied the residence for 2016. It's a little complicated. This is one of the reasons why somebody, when they first buy a home, they're generally getting into some professional tax preparation.
And that's why we call Mike.
And that's why you call me. And I do the best that I can to explain it all in terms that they understand. I'm going to do it in a manner that's going to keep them out of trouble should their return be audited. It's going to get done right. These are the kinds of things, first-time home purchases, these are the kinds of things that if someone's auditing a return, this is something that they want to look at because they know it's the most misunderstood and usually where the biggest errors occur. And the errors are usually in taking more deductions off of that closing statement than you were entitled to.
Yeah, there's nothing worse than getting that letter from the IRS the next year saying, hey, we've got an audit. That's when they got to call you back again, right?
That's when they call you back. And audit representation in front of the Internal Revenue Service is something I've done for my entire career. I would like to add that I'm very good at it. You get good at it, when you've had a lot. But, the truth of the matter is, and I have a newsletter that's going to be coming out here in January, it explains in that newsletter that, your chances of audit are really very slim. But that doesn't mean that we should go and look at our return, with the attitude of, okay, it's the wild, wild west out here, because I've only got a 1% chance of audit.
Right.
When you do get audited, and sometimes it would, it'd just be a random thing. Obviously, it's a lose-lose situation if that occurs. You lost the lottery. Hopefully, you'd like to have that comfort that everything's in order. And particularly what the year and the items that they're looking at on your tax return are all going to be in order and all good. And if they are, they don't look at any other years.
Done.
You're done. You close it up, and it's really, not a very stressful process, particularly if you have representation. Because I don't let my clients come and sit with me at the IRS. There's
So-
no percentage in doing that.
How long do they have to come back normally?
3 years
3 years. So
3
after
years
3 years, you
from
can,
the due date of the return.
so you can successfully, in the 4th or 5th year, get rid of all of your old tax return stuff.
No. So even though if you go back in your prior 3-year filings, even though the statute of limitations for auditing those returns have passed, there may be other reasons why you might want to keep tax returns for that period of time. Generally, I say 7 years.
Okay.
Now, here's the nice part about record keeping for clients. By law, I have to keep their returns for 7 years. I'm going to have that return for 7 years. You don't really need to keep anything that is possible to retrieve from somewhere else.
Okay.
I also keep all the prior year's tax returns in a web portal for the client. So they can either choose, if they want their return on paper, and if you want that, I find that most people today, if they give them a choice of having an electronic copy or paper copy, they're going to say, you know what, you keep the paper. I've got enough things at home.
Sure.
And they can take comfort with a tax preparer that tax preparer is, by law, has to retain copies of those returns if they ever need them, should they be overzealous in their house cleaning and totally shred those returns. But there are other reasons why you want to keep a return, sometimes a return indefinitely. The year I purchase a house, how am I going to prove the cost of that house when I go to calculate gain or loss when I sell it 25 years from now? The only way I can prove it is by retaining that particular tax return forever. I'm only required to keep them for 7 years, so if you need them for 7, I got it.
Yeah,
You
for
bought a
that,
house
you're on your
15
own.
years ago, you're on your own.
Right.
All right. Well, very cool. There's a ton of stuff that we could probably go into here, and we could be here forever, but we're going to keep this a little short, as we tend to do with our podcast. If someone wants to get in touch with you in order to retain your services, Mike, for your CPS services and tax prep, how would they get in touch with you? What's the best way?
Well, my office actually is about 10 minutes away from here. It's at 750 East Deal Road in Naperville. And you can reach me at 630-282-6520. That's my office number. Usually at any time, leave a message. I return my calls pretty quickly. And also, you can check out my firm and all the services that I provide by going to www.breierconsulting.net. That's BREIER consulting.net.
Awesome. Keith, if someone wants to get in touch with you for mortgage services, how can they get in touch with you?
Easy way to do it. My phone number, cell 630-306-LOAN. That's 630-306-5626. Or you can email me at keith.hoffman@dkmortgage.com.
Awesome.
And you?
Best way to get in touch with me is through my website. It's just tajiclark.com, TAJICLARK.com. It's got all of my contact numbers, social sites, every way that you can think of to get in touch with me is on there. Also for Kevin, I'm going to speak up for him since he's not here. If you want to get in touch with Kevin, you can reach out to him through several ways.
The easiest way is...
His website is www.o'flaherty-law.com. He's got a podcast that he does, learn-about-law-.com. And then he's also got a Seize Your Business podcast he does, seizeyourbusiness.com. We also had the fortunality to be recorded today by Weiler Studios, Tom Weiler. If you like the production of this video or any of our other videos and want to record a video of your own, go to weilerstudios.com and you can get more information there about him and his
Good.
recording.
Peace.